Hey everyone, welcome back to Corporate Decoder, the place where we, decode corporate stuff. Today we are diving into the Putnam Target Date Funds report, and let me tell you, it's a bit like trying to guess what your grandma's going to bake next. You know it's going to be something, but the ingredients are always a surprise. We'll find out what's cooking and whether it's worth a bite. We are looking at their report ending this January. These funds are basically designed to be a hands-off way to save for retirement. The idea is that they automatically adjust their investments to be more conservative as you get closer to your retirement date, like a financial autopilot. This report contains important information about Putnam's Sustainable Retirement 2065 fund for the period August 1, 2024 to January 31, 2025. So it's like a checkup to see how these funds are doing and if they are on track to meet their goals. First off, let's talk about costs, because that's what everyone wants to know. For the Class A shares, which is just one type of share they offer, the cost for a hypothetical $10,000 investment over the last 6 months would be about $15. They were about zero. $10,000 investment over the last 6 months would be about 15 of. That was 0.28% of that initial investment. Now, looking at the key fund statistics, the total net assets are about $955,233. Total number of portfolio holdings is around 8. So the fund's investment strategy has a small amount of ETFs. And the portfolio turnover rate is 11%. This number tells us how actively the fund managers are buying and selling investments. In this case, about 11% of the fund's holdings were replaced during the year. That means roughly 1 out of 10 assets were changed. If you need more information, you can visit this website. Let's move on. I'm skipping Class B, Class C, Class R, Class R3, Class R4, and Class R5. For Class R6, it actually has negative costs for the last 6 months, minus 0.07% or a $4 credit on a hypothetical $10,000 investment. Keep this in mind as it is important. Total number of portfolio holdings are around 8. It also has a portfolio turnover rate of 11%. But again, if you want more details, you can find the prospectus in their website. All right, now looking at Class Y, those costs are also pretty low, just $2, which is about 0.03%. Total number of portfolio holdings are around 8. It also has a portfolio turnover rate of 11%, not a big change. Now let's change to another fund, the Putnam Sustainable Retirement 2060 Fund Class A. The majority of its assets are in equity investment companies. At about 64.1%, these numbers are changing now. Fixed income investment companies are around 27% and short-term investments is at 2.4%. For the Putnam Sustainable Retirement 2060 Fund Class R6, we also see a negative cost for the last 6 months, about negative $4. That's a Euro 7%. I'll skip the usual and let you see it for yourself in the website. Now moving to another fund. Now we are diving into Putnam Sustainable Retirement 2055 Fund Class A. The total net assets are about $131,884 for $1,884 that, 61.4%. About 25.6% are in fixed income and only a small amount of 2.3% in short-term fund and cash equivalents. The portfolio turnover rate for 6% are in fixed income and only a small amount of 2.3% in short-term fund and cash equivalents. The portfolio turnover rate for it is only 5%. With a Class R5 for that same fund, the cost were just about $2 on 10,000, a very cheap fund. Let's move to Putnam Sustainable Retirement 2050 Fund. The numbers are a bit higher now. Most of their assets are in equity investment companies with 58.5% and then second majority with 24.1% in fixed income investment companies. In Class A, the costs paid are $15 for a 10K investment. If you want to know more about these funds, just go to the website. Don't forget. Putnam Sustainable Retirement 2045 Fund is fairly the same. For the Class A, most of the investments are in equity investment, about 55.5% with a 22.4% in fixed income. Short term is really tiny amount of 2.1%. The costs for that Class A are $16. Now to the next one. The numbers are somewhat the same, but different. The theme mostly stays with same strategy in a sense, so I won't need to repeat much details. In Class A, the cost is approximately $15. Now for Putnam Sustainable Retirement 2035 Fund, the costs are also mostly low in Class A. The expenses come out to be about $18. But let's see, what about the other numbers? The majority has switched from equity to be in fixed incomes. Equity became 45.2% and fixed income about 36.6%. This theme keeps going in Putnam's Sustainable Retirement 2030, with the trend continuing. It seems like this report follows the strategy of most target date funds. In Putnam's Sustainable Retirement 2025, the costs stay about the same as all the rest. The theme really does seem to continue with them. Most are in fixed income ETFs. We have more to talk about and there's not much time, so I'll try to focus. Lastly, in Putnam's Sustainable Retirement Maturity Fund Class Y, the costs paid are around $9. Now, after all of those details, let's get into my take and the rest of the SEC report. The Principal Executive Officer and Principal Financial Officer think their disclosure controls and procedures are effective, which is normal to say at this point of the report. Basically, everyone's saying, yep, we're doing our jobs as far as we can tell. Now, what does this all mean? Well, Putnam is heavily emphasizing the sustainable in their retirement funds, pushing investments into ESG-focused ETFs. This is a trend, but one must keep in mind the funds have very small portfolio holding counts of around 7 or 8. In the future, there may be greater competition from other funds with similar returns and ESG investments. Looking at all the different funds and classes is good for people to customize what their plans are because every retirement savings is not the same. The majority of the funds are placed in equity and some are placed in fixed income, with the exception of a few, and the Class R6 shares has some very low numbers to be very happy about. The key takeaway is that Putnam target date funds appear to be sticking to the safe investment strategies, which may not be ideal for everyone given the fact that they follow the same investment of primarily ETFs with low amount of holdings. Thanks for watching, and if you found that helpful in any way, please like and subscribe. I'd greatly appreciate it. And let me know in the comments what ticker you want me to dive into next.